Based on the latest news, the impact of the Venezuela conflict on the Iraqi dinar would work almost entirely through changes in global oil prices. As a nation whose economy and government budget depend almost entirely on oil revenue, Iraq's financial health is directly tied to the price of crude. The immediate and direct impact is considered limited and mixed. Short-term price support. The conflict has reintroduced a geopolitical risk premium into oil markets. A senior advisor to Iraq's prime minister stated the situation could contribute to pushing oil prices towards $70 per barrel. Higher oil prices would benefit Iraq's oil revenues, which is positive for the dinar's stability. Limited market shock. However, most expert analysis agrees the price impact will be muted. Venezuela currently produces less than 1% of global supply, and the market is currently oversupplied. Some analysts project only a $1 to $2 per barrel increase. Long-term downward pressure. Ironically, if the U.S. intervention eventually leads to a new government that lifts sanctions and attracts investment, Venezuela's oil production could significantly increase over the next few years. This would add more crude to the global market, potentially putting downward pressure on prices in the medium term, which would be a negative factor for Iraq.
How oil prices affect the Iraqi dinar. To understand why oil is so crucial, economic lifeline. Oil revenue funds about 91% of Iraq's federal budget. Higher prices mean more money for government spending, which supports the economy. Currency stability. The Central Bank of Iraq uses its foreign currency reserves, largely from oil sales, to maintain the dinar's peg to the US dollar. Stronger oil revenue means more resources to defend a currency's value. Current state of Iraq's economy and the dinar. It's important to view this event within Iraq's broader economic context, which remains fragile and oil-dependent. Key economic challenges for Iraq. GDP growth, projected at a sluggish 0.5% for 2025, with a gradual recovery to 3.5% in 2026. Fiscal deficit. The budget deficit is widening and forecast to reach -7% of GDP in 2026. Public debt, rising rapidly, expected to hit 58% of GDP in 2026. Core weakness. The economy is overwhelmingly reliant on oil, which constitutes 45% of GDP and 99% of exports. The official exchange rate has recently been stable at about 1,300 IQD to 1 USD, with a successful central bank reform significantly narrowing the gap with the parallel market rate. In summary, the Venezuela conflict is not a direct event for Iraq, but a global oil market development. Its primary consequence for the dinar is through oil prices, offering mild short-term support but potentially adding to medium-term price pressures. The dinar's fundamental value remains tied to Iraq's success in managing its deep-seated economic challenges and oil dependency. Would you like a deeper analysis of how specific oil price thresholds, such as $65 versus $75 per barrel, might affect Iraq's budget calculations? Based on verifiable financial reports and official statements, there is no evidence of any major revaluation of the Iraqi dinar. The currency and the country's economic planning indicate a focus on stability rather than sudden change. Exchange rate stability. Official versus market rate. The Central Bank of Iraq's official exchange rate holds firm at 1,320 IQD to $1. In local markets, the rate is slightly weaker. For example, on January 4, 2026, $100 could be sold for approximately 145,700 IQD in Baghdad, translating to a market rate near 1,457 IQD to $1. This gap between the official and market rate is a persistent feature. Historical context. This stability is not new. Analysis of the exchange rate over the past week, month, and longer periods shows minimal fluctuation, with the value remaining around 0.000763 USD per 1 IQD.
Official economic and budgetary news. 2026 budget guidance. Key economic news comes from Iraq's Finance Committee, which has indicated there will be no change to the dinar's exchange rate in 2026. The government is operating under an extended 2024 budget law, which restricts spending primarily to operational expenses and postpones new major development projects. This signals a period of fiscal consolidation. Combating misinformation. The Presidency of the Republic issued a strong denial on January 1, 2026, refuting a fabricated social media claim that the president received a 90 million dinar monthly pension. The statement warned the public against such false news and emphasized relying only on official sources for information. Other economic indicators. In related financial markets, the price of gold saw an increase in Iraqi trading hubs. On January 4th, the selling price for 21-carat imported gold in Baghdad rose to 882,000 IQD per mithqal, up from 878,000 the previous day. Current exchange rate and stability. The Iraqi dinar's exchange rate against the US dollar remains highly stable, a situation actively managed by the Central Bank of Iraq. USD/IQD rate. Official mid-market rate, 1,310 IQD per 1 USD. Inverse rate, IQD/USD, approximately 0.0000763 USD per 1 IQD. Stability record, the rate has shown 0% change over the past week and month, indicating deliberate and successful monetary policy to maintain stability. Against other major currencies, Euro, EUR, 1 euro approximately 1,535.39 IQD. British pound, GBP, 1 GBP approximately 1,763.26 IQD. Japanese yen, JPY, 100 IQD approximately 11.97 JPY. Economic outlook and gold markets. Beyond the currency, two other key economic indicators, official guidance on the budget and the domestic gold market, provide insight into current conditions. Key economic development, the 2026 budget. A significant update relates to the Iraqi federal budget. Credible reports indicate that due to ongoing negotiations to form a new government, Iraq is unlikely to pass a federal budget law for 2026. The country is expected to operate under a provisional 1/12 spending mechanism, extending the previous year's monthly budgetary allocations. This political delay directly impacts government planning and major investment projects. Domestic gold market activity. Gold is a traditional store of value in Iraq. Prices rose in the opening trading sessions of 2026 in Baghdad and Erbil. Imported gold, 21 carat, in Baghdad, selling price reached 878,000 IQD per mithqal, approximately 4.25 grams, on January 3, 2026. Local market context. Gold prices in IQD have increased substantially over the long term, partly reflecting global gold trends. For example, the price of 24-carat gold per gram has risen over 64% in the past year. What this means for you. These updates provide a factual snapshot of Iraq's economic situation. Number 1. No revaluation. There is no evidence of a major change or revaluation of the IQD. The central bank's policy is focused on maintaining a stable peg to the US dollar. Number 2. Political impact on the economy. The delay in the 2026 federal budget highlights how political processes can influence economic planning, potentially postponing new development initiatives. Number 3. Inflation hedge. The strong performance of gold prices in the local market suggests continued demand for assets considered a hedge against uncertainty.